GKFX Prime presents the Market Analysis Webinar.
Hello everybody, welcome to this edition of the weekly webinar. I'd say we're at an important swing point now, an important juncture in the US dollar. We're hitting major support for the US dollar, major resistance for gold, as well as some of the major currency pairs. Support in dollar yen, obviously, and it's just a question of whether we can break through. Even a similar situation with WTI crude oil based in US dollars. Does seem like we're hitting some overhead resistance, and it's just a matter of whether we can break on through. So we'll look through some of these charts in more detail. Obviously, any other charts you'd like us to look at, let us know. Any strategy that you're considering, leave a comment, we can talk about it. Otherwise, please click that like button. If you get some use out of this video, it really helps. So let's have a look at the euro dollar chart. So very much the same situation, evolving from last week, where we said that this through the closing levels was really the kind of major support that we were looking for, although of course we had a challenge of that peak as well, and we pulled back from that challenge. But actually probably what we're looking at is just a challenge of this greater supply area up here, two of them put together in fact. So now the last thing that we've seen is this long-wicked candlestick here showing selling pressure, which abated, and we closed up here. So that all came about because we had some really surprisingly strong US inflation data. The US core PCE, which is what the Fed use as their main gauge of inflation, hit its highest level since 1992. So fair to say there is some inflation in the US right now, but even though it was very strong data, which strong US data, which is good for the dollar, people still are taking the view that the Fed aren't going to really do anything about it. So it's only when the Fed react by pulling back on the QE and eventually hiking rates, or signaling that they will at least, that you can actually see some strength in the dollar. So that we may still see some strength in the dollar, but that's, I think, the logic behind why we had this big daily drop in the euro dollar, rally in the dollar, and then subsequent reversal of most of that dollar rally. So in terms of technically, that puts us back above this key level here, and I think it puts us on course to test these highs. So we basically had a strong rally. We came into the big area of supply, the big strong resistance from this reversal here. We pulled back from it, but this looks like people are ready to buy. After that pullback, people have been buying in already, and I think that probably that upside momentum continues. If we do get a daily close back below this key support, which we haven't been able to in the last 3 days, but maybe we do on the 4th or 5th day. Then that turns the outlook a bit more cautious. I still think the overall move in the euro seems to be to the upside, but that would suggest a deeper correction down towards some of these lows down here. Now let's have a look at the British pound, and you can see that we're still in the process. So this has been the last couple of weeks. So we're still basically challenging this previous high, and that's what I was talking about. These support areas in the dollar, these resistance areas in the other major currency pairs. The pound, last thing we saw is a big bullish engulfing candlestick here, which actually eclipsed 1, 2, 3, 4, and then maybe 5, 6, 7. Depending on where your closing prices is for these. It was certainly close. If you look at where the bodies were, I think it probably wasn't quite on these two long candlesticks here, but it's certainly a bullish engulfing candlestick that engulfed at least 4 days worth of price action and took us up to the highest close for the pound. It's a multi-year high in terms of closing price. We saw a bit of a pullback. Again, same story about that US inflation, but it didn't even take us outside of this kind of this demand zone, this supply zone rather. And so it looks like we're going to push out to the top side here, but we do have this. If we drop down to the 4-hour chart, you can see that we've basically held on to this support pretty neatly. That's what happened on Friday. We had the drop down. Couldn't even get down to these previous areas of support, that it just held inside that supply zone. So it looks like we've held this and then we've come up and we've held this. It looks like we're probably going to get that decisive break to the top side in the not too distant future. That's the direction of the trend. But if we get a failure here and we roll over, then that does tell us that we've got some dollar strength coming. So that's why I say it's a bit of a key moment for whether we can actually get these breakouts. Dollar yen, probably the most confusing of the bunch, because actually we on the last couple of webinars we talked about how it was just going nowhere and it's trading in a sideways range. Well, we saw that dollar strength coming into the end of the week last week with the just the reversal as we've already talked about on Friday, but that actually took us out of this sideways range that we've been in terms of dollar yen. So a little bit more confusing on that prospect. It also took us above. If we're talking about a drop there and a kind of rally up, a retracement, you expect the kind of retracement to come somewhere before the 61.8 and continue lower. This is something more like the 76.4. If you use that as a Fibonacci level, I tend not to. And it was obviously through the key 110 level. We basically got up through 110 and then pulled back. So it may be just that dollar yen's paying more attention to 110, something like in here, a little test and roll over. Okay, if that's the case, then it's still consistent with that, the dollar coming into these kind of weak levels and then potentially rolling over again. Dollar yen, a bit more confusing, still a currency pair that I'm avoiding at the moment because it's just not quite clear where the trend is. Gold, certainly one of the most clearest trends out there. We came in and we tested the 1900 level last week, and so that's kind of what we're toying with at the moment, and we wouldn't be surprised to see some sort of deeper pullback from the 1900 level. And obviously we had that initial drop here, but the fact that the next 2 days we didn't even close lower after that reversal candlestick suggests to me that actually the gold's still looking pretty strong, and we may even just continue up to this kind of 1950 is the sort of midpoint of it, but basically from where these two highs were having their price action, that's where this big supply zone's up here, and I wouldn't be surprised if we get up to that where's the base of that? 1935. That could be an area that we shoot up from here before we see that deeper correction. If this does end up being the peak around 1910 where we got last week, then we do have a neat little pullback area into the 50 and the 61.8 Fibonacci levels, coming just above this peak here and into this kind of previous low through here as well. So this I would expect to be a potential zone of support if we do get a dip from here. But actually, as I say, the price action looks pretty strong, and it looks like people are already buying in after this small dip through here. So gold continuing to look strong, and just looking out for this big supply area overhead, which we might encounter this week. Switching gears to silver, and again, it's sort of similar idea in terms of the price action. This is actually on the weekly chart. I just wanted to make note of this, that a couple of weeks ago we'd said, oh, this looks a bit dicey. A big reversal on the weekly chart. I think it was even last week where I said, okay, overall positive on silver, but we've come into this first area of resistance, and then that's the second one up here. We haven't got to that yet, but at the first one we've shown signs of reversal. Well, just the following week we closed higher, so no sign that investors are following through on that bearishness, and that's by the fact that the bears couldn't show up and follow through on this big bearish candlestick. It's a bullish sign. Now they could show up this week or next before we get through the peak of the candlestick again. But I'm saying it's a good sign for now, and it's in keeping with the overall uptrend. And again, a possibility of us breaking through some major resistance area and seeing a commodity break higher and the dollar turn lower against that commodity. Just on the daily chart here, quite a neat little rising trend line here, and what I thought was encouraging is that it basically dipped down into this well-established area of support You can see in terms of daily lows here, but if you go down to the 4-hour chart, you can see a bit kind of neatly how many times we've actually dealt with this. Because basically it was this low here, but we've had a couple of fake false breaks, but we've generally held above it as support. Big drop down to the trend line and then rallied up neatly. And now we're kind of still in the same kind of sideways area. We don't know exactly what's going to happen in here, but if we can get a dip closer to this support again, it looks to me, in keeping with everything else that's going on, that we've held the support and we're going to push to the top side. Moving on to WTI crude oil. This is the weekly chart, just reminding ourselves that super strong market. Obviously had the rally up, and then we had the kind of classic bull flag. Hold on. In case you didn't know, you hold control and then you're able to drag it around and create a duplicate. I'm sure all of you know that, but just a helpful little fact. So we had the bull flag, rallied up strongly again. Now we're dealing with a triangle, an ascending triangle. And it's starting to look increasingly like the result is going to be the same, an upside break. And this time it's going to be through major resistance through these peaks here, and up to challenge the up through the $70 per barrel level in WTI. This equivalent kind of level in Brent is about 70. And then again, that can take us up to these previous areas of resistance, starting here and ending up through here, kind of this big reversal that started off the big decline. That recently has sort of 75 as a midpoint. And yeah, and you know, looking at, we had a couple of weeks of weakness, and then we had a strong week last week, which closed right into that area of resistance. And I thought kind of interestingly is that we had quite a neat trend line. We broke it, and then we came right back through it, and then we started acting as if we'd never broken it. Look, we've just held it again on the last few days. So looking like a positive break here, but just follow the market action. I think assume a break to the top side, and some more bullish action. But if we do get a reversal in this area, we turn back below. So if we do something like this, we break to the top side, and then suddenly we're back lower through it again. Then I think this is a good time to turn bearish. We'll assume that the break continues and probably doesn't even get down to this to the resistance, and continues to the top side. Switching gears to just the one index that we tend to look at, the S&P 500. I've just drawn, there isn't really a trend line that particularly captures this action particularly excellently, but this, if we zoom out a little bit, you can see that actually this, ever since we had the dip last year, the 100-day moving average has worked pretty neatly. We broke to the top side, touched it, rallied up, came back, touched it, little vague break, and then it's been supporting the price quite long. And so I haven't drawn this on the chart before, but I do think it captures it quite well, really since this major rally began in March. So I think that would be a key moment. If we had another one of these, I suspect this time that the next time that happens, we'd actually get some more follow through to the downside. And again, we're in a big resistance area. If some of my buttons have changed places, but you can see this is where we hit a peak. We had a bit of a false breakout, slumped, but then we came right back, and then we're testing it again, and it looks like we're going to move out to the top side. So we're in this kind of zone here. We've been dealing with it for a while, but it looks like we're after a dip, we're back into it. Of course, we could have again the same thing we described in oil, break to the top side and turn back lower. So I think if we see a move above 250, for 250, we assume it's bullish. We assume the breakout's continuing. But if we're wrong and we get a close back below 4200, that's when I think we turn more cautious, and we actually expect something more like a double top, where we get a test of the low, and then actually maybe even a move down through the 200-day through the 100-day moving average. That's the kind of playbook we're dealing with here. Last but not least, Bitcoin. If you are still bullish Bitcoin, but you're a little nervous about whether to buy in or not after this epic decline, one potential strategy would be we got a test of the 200-day moving average when we came lower. If we get a second little test of this 200-day moving average and then rally up again, or we're basically just talking about something close to a test of that spike low, then that's a justifiable, you're not just jumping in anywhere. You're talking about a technical test of support and assuming that it holds. And if it doesn't, obviously, that's your sign that you're wrong on the trade and you'd cut your losses. Hard to tell whether this thing can go lower. It's obviously an epic correction. I think the belief is still out there in Bitcoin, but it's obviously been shaken a bit. There's obviously a lot of leveraged trades that got unwound during this decline. And people might still be trying to take profits. I suspect I said the same thing last week, that we can probably still get a rally up to 50 and then struggle a bit again at 50. Let's see how it all pans out. Very volatile. The last thing, I said the same thing last week. Remember the previous all-time high, I'm trying to get it on the chart here but struggling, was here from 2017. Potential next stop if indeed we do get a break to the downside. So you could certainly try. We're at 35 right now. The lows are around 30. So you could certainly assume that we found a low now between 30 and 35. Or you could take a more cautious approach, wait for better prices, and wait for a pullback to that previous record high at 20k, which I would imagine would be some sort of decent support. Resistance turned support. All right. Thank you very much for watching, everyone. Good luck trading this week, and I'll see you at the same time next week. Make sure you subscribe to the channel. That way you don't miss when the next video comes out. You can actually click that bell as well and receive notifications, and it will tell you when the next video is out. Thank you, everyone.